All right. Today's tax return, we're going to do a practice tax return involving a 2018 tax return for married taxpayers who the husband has W-2 earnings, and they also have a rental condo. And so we'll be doing the Schedule E and any other associated forms with that condo. Sam and Sue Miller are married. Sam has a social security number, date of birth. Sue also has a social security number, date of birth. They live in Huntington Beach, California. Sam's a lawyer. The W-2 info's on the next page. They have a home and cell phone numbers. Sue handles their rental condo with management services and their son. They have a young son named Steve, who is not quite 2 years yet, and he has a social security number. They rent their home but own a rental condo, and the information's on the next page yet. It's on the next page. They're not sure if they're going to get a refund or if they're going to have a balance due. So at this point, we don't know which way they're going to go yet. Okay. Sam works for the SUNY law firm on Main Street in Anaheim, California. They've got an EIN number. He made $125,000, paid $21,999 for federal taxes. His Social Security tax, $77.50, and Medicare tax was $18.13. He did pay California taxes of $10,000, and he did pay state disability insurance to the tune of $333. There's no pension plan, but he was covered by the company for health care. The rental information, it's a rental condo. It's on Surfside Street in Huntington Beach. The income for rental income for 2018 was $48,000. He had expenses of mortgage, $36,000, advertising $500, insurance was $1,000, legal professional fees $500, management fees $4,800, taxes $5,000, homeowners association fees of $3,600. He started renting it on 1/1/2018. The condo was valued at $700,000. I'm sorry, not valued, but they paid $700,000 for the condo, and the land value was $100,000. So let's go ahead and do the tax return. All right, so we're going to start a new tax return. Because I'm using two screens, it shows up on the other screen. So we've got Sam, and Sam's social security number is 566-221111. And we're going to look at his W-2 now, and we find out that the W-2 is also 566-221111. Can we say okay? Now make sure, this is like a double check. Don't just look at his Social Security card and then look at his Social Security card again. Look at something different that he has with that Social Security number. All right. So Sam, his date of birth is 5/1/1980. Okay. His name is Sam, no middle initial, and last name is Miller. And his occupation, he is a lawyer or attorney, whichever one sounds nicer. He's not a dependent on anybody else. He's not blind, nor is he disabled. His home phone number is 949-842-5555. And his cell number is 949-654-8888. And he didn't give us his email number. He does not want to be texted. His preferred contact is by cell. Okay. His language is English, and the taxpayer is a male. Okay. He did not receive any notices from the IRS during the summer. about fraud or identity theft. We will take his driver's license number at this point, and the state is California, and it was issued on 02/01. He just had a renewed, 2018, and it expires 02/01. And here in California, it's 5 years, 2023. And it's a driver's license, okay? His filing status, he's going to be filing married, filing joint, and that is number 2. And so his spouse, his wife's social is 55533 2222. Oops, I did that wrong. It's 55533. All right. Oops. 555332222. Her date of birth is 6/1/1980. Okay, so she's 38 years. Her name is Sue, no middle initial, Miller. And her occupation, she is works at home. She's a homemaker. She's not a dependent of anybody else. She's not blind or disabled. And she's got the same phone number. The home phone number is 949-842-5555. Oops. All right, and she does not have a cell phone number. No email, no that. Preferred contact would be the home phone. And she's a female. She didn't receive anything, and we looked at her number, and her ID is California, and issue date was 03/01/2015. 03/01. Okay. All right. And it's a driver's license also. All right. So the address, they live on 1345 Tempe Road. Okay. And it's a house, and the zip code there is 92647. All right. Not in combat. They're not sure if they're going to get a refund or not. He made quite a bit of money. So we'll leave that blank for now. We can always come back and fix that. They weren't referred by anybody. And by the way, if you are going to do a referral program of sorts, make sure you set it up with the different types of referrals, friend of referral or whatever, radio referral, or, you got it because you put out some marketing material out there with coding on it. That could be another referral. They don't want to subscribe to the Protection Plus, and they were covered by their employer. Okay, they have a son named Steve, and his last name is Miller. And his birthday is 04/01/2017. So he's 1 year old, last year. His social is 601-228888. He is the son. And he lived with them all year last year. Okay. And may be eligible for, he would be eligible if the income was right, and also for the child tax credit. So he's just eligible, doesn't mean they're going to get it. Okay. It's based on income. So they didn't have any dependent care, so we don't have to put anything there. And that's a state ID number, which we don't need. All right. So that's it for that. So the next thing we're going to do is we're going to add the form, the W-2. And the employer's ID number is 33366. Now remember what I told you. If you see more than 9 numbers or less than 9 numbers, you know it's fraudulent or it's incorrect. Okay. So if you see like 33 and then 3 and then 1, 2, 3, 4, let's say only 4 6s, then you know there's something wrong with that W-2. Okay. All right. The name of the company was Sumi. It's a neat name. Law firm. Okay, and the address is 533 Main Street. And the zip code there is 92801. And it's in Anaheim. He made $125,000. Okay, and he had $21,999 withheld. And so we need to check on box 4 and box 6. It says here he had $77.50 withheld, so that's correct. And he did have $18.13, and that's correct for Medicare. Okay, so that's good. Then we had state disability insurance. He paid $333. Okay. He's not covered by a pension plan. So he did have California taxes withheld, $125,000. And withheld was $10,000. Okay. He didn't have any city or local taxes withheld. Okay. So I think we're done with the W-2. So the next thing they had a rental. Okay. So we're going to, if you don't know what the rental form number is, you can always go to index and put rental in here. Rental expenses, okay? Or you can right here, rental property, Schedule E, okay? So we're going to go to the Schedule E. And here we have your Schedule E, page 1. Did you make any payments that require filing Form 1099? And the answer was no. Okay, and if yes, then you have to. Obviously, if you did, then you will have to file all the required 1099s. Okay, so the first property is 232 Surfside Street. Okay, and the zip code there is 92649. Okay, and it says here property type. Let's see what the choices are. Is it a single family residence, multifamily, vacation, commercial land, royalty, self-rental, or other? It was a single family residence. Okay, a condo is considered a SFR. Okay, single family residence. Okay, the next thing is number of days rented at fair rental value. I don't know if there were 365 days or 364 days. I think it was 364, right? It wasn't leap year last year, I think. All right. Personal days. Did they use it at all? No, they didn't. So that's 0. QJV, check if owned property as a member of a qualified joint venture, and they didn't do that. QBI, Remember what QBI is? That's that new 20% rule, okay? Let's see what it is. Is it a qualified trade or business? Is it specified service trade or business? Or is it not eligible for deduction? Okay, so it's none of these. So we don't have to put anything there. The next thing is use a worksheet to enter passive at risk choices. They are at risk for any profits that they make. Who owns it? It's jointly owned, so we leave that blank. Uh-oh, it just made a mark there. It should have made a mark. Okay, this is California, and the city was Huntington Beach. Okay. Okay, he only had one, so this one shouldn't be in there. All right. Now, rents received. He received $48,000. So I guess that came out to $4,000 per month rent. Okay. All right. Now he had expenses. Now I'm going to trick you a little bit and see how sharp you are. I'm going to put some amounts here, but there are other amounts that could go into these boxes as well. And that's something you need to ask your client, okay, to show how well you know the tax law. Now he did spend, or they spent $500 for advertising. Okay. They spent $1,000 for insurance. They spent $36,000 for mortgage interest. Okay, they also spent legal fees, professional fees, right here of $500. And they spend management fees of $4,800. Taxes of $5,000. And homeowners association fees of $3,600. All right, can anybody guess what other items you see here that they could have had as expenses? Let's go from here. So we know depreciation, which we're still going to get to. Okay, depletion, no, right? Utilities. The customers in this situation covered, or the people who lived in the condo paid for all utilities. Okay, supplies. Again, they didn't spend any money on supplies because they bought it and converted right into a rental, so they didn't have to buy any supplies. There were no repairs made because the house was brand new, and so there were no repairs. They didn't have a second loan or anything like that. Commissions, they didn't pay any commissions to anybody. Cleaning and maintenance, it was clean when the first tenants moved in. Travel expenses. Okay, this is something I did not put in there. I was hoping that somebody would catch it. But anyway, remember that if they collect rent, let's say, there's back and forth driving of the car, they might have had, they might have had to travel there to get the house ready for the new tenants or to show the tenants. So those are all things that that you should need to ask your client, okay? Did they have telephone expenses talking to the client? Maybe the client was long distance initially when they made the deal, okay? So all these things are things that you need to ask, okay? All right. So next we're going to go to depreciation, because remember, you can depreciate this this house. Okay, so remember in the beginning of the session, I mentioned to you guys that this year you have to actually go to an asset manager before you go to depreciation. In the old days, you could put the depreciation expense right in this block here, but that's changed. So we have to go to get a new form. Now, I don't know what the asset manager's form is or what it is. So what I'm going to do is I'm going to go hit index, and I'm just going to do depreciation here. And look where it goes to. It goes right to depreciation down here, and it says asset. The name is the asset. Okay, it's called asset form or asset manager. So we click on that, and we're talking about, see, if you had used a card, it was available to you to depreciate your car as well. So we're going to go to Surfside, and it's a new asset, and we have to figure out what the asset is. Well, the asset is a residential rental property. Okay, so we click on this, and it takes us to this right here, and you can put rental home up here if you want, rental condo. Okay, so the original price that they paid was $700,000. Okay, however, in case of a fire or whatever, you know there's still land there, right? So the land was valued at $100,000. Okay, and this is for both federal and state. Now, some states have different rules for depreciation, so make sure if any of you are outside of California that you look into that. Sometimes you have to make adjustments on depreciation in particular states. Okay, so we're going to now go to close it. Okay, and there's the rental condo, and as you can see, the depreciation for 2018 is $20,909. Okay, and we're going to return list. Okay, we're going to close this, and there it goes. It's automatically goes on the Schedule E, line number 18A. Okay, all right. So it looks like we're done. Always double check everything. Also, sometimes you might want to ask them, well, who did you pay the mortgage interest to? Well, went to Wells Fargo Bank. And then, you know, you could put the account number, whatever. So also line 12 refers to mortgage interest. You might have gotten a 1098 from the bank, and you would say, I have seen the 1098. Okay. All right. So now we're back. Let's see. There's nothing else to the problem, so we are done. So we're going to refresh. And right now, it looks like they have a federal refund of $12,644, so they way overpaid. Okay. Now, we still have to do the California return. So as of today, like I said, California is still not available. Okay, there's California. Okay. And there's the message, California state package is not yet released. Okay. And let's okay. Always refresh it, and then it'll pop up. If you don't see California, just refresh and it'll show up. Okay, and here is their California return. Okay, they're filing jointly. 2 times the 114 exemption, and then the one kid for 353 equals 581. There's their income, their California standard deduction. Okay, they didn't itemize. And there's their tax table and other taxes. Payments, 10,000 was how much they had deducted from his job, his income wages. Looks like he has a very nice large refund of $6,100. $142. Now, if the California state was ready, you would also see it up here right next to the federal refund. It will have federal refund and it would have California refund up there as well. But because it's not released yet, there's nothing up here. Okay, but look for that. Okay, then we refresh it and then we have to verify it. Okay, now again, because all the software is not in yet, all of these things are popping up for me. Okay, so by doing that, I told you to contact your tech department, and that would, if I would have done that, they probably would have cleared a lot of these errors here. Okay, so make sure that you do contact them so that you can, so that you'll be ahead of the curve, so to speak. Okay, so that is that. So let's go back to our. All right. So at this point, I want to mention a few things before I take any questions. First of all, make sure you take a look at the tutorial and email me any questions that you may have. Okay. And also your homework, kind of figure out your own tax return. Put your own tax return on there. Okay. And I would not put it on the training. I would put it on the real side. And if you have any questions with that, by all means, give me a call or email me. Our last official training webinar is on Thursday, the 10th, and it'll be at 12 p.m. Pacific time. But stay tuned for more. We're going to have some more live webinars this month. I know Andy's going to do a presentation on all the new tax laws and everything. It will be called the update class. And we're also going to create some mini informational webinars that will be recorded and will be placed in your folder. Okay, so all of these things will be placed in your folder. Since you guys bought the software, you have your own folder. I hope all of you have found your folder. If you don't have a folder, please email me at glenn@prontotaxschool.com. Okay, update your software daily and download at least 4 active years. Remember that you can still file. If somebody might have a refund coming from 2015, they haven't filed, they can still get that refund. Now, 2014 is a dead year. Okay, so if they have a refund coming from 2014, they won't get that refund. However, you are allowed to download as many as 15 years, okay? But 4 active years, 15, 16, 17, and 18 should be in your computer. Connect with your tech support and add, if you want to add any specialized reports, setups. You have certain printer setups that you want, like you don't want to print, or you do want to print, or you're going to do checks. Make sure that they set you up properly. Database changes. Okay, if you have any more people that you've added to your staff, and you want to add them to it, let them do it for you. But do it all before the 28th. Okay, the 28th of January is that magical date when the IRS opens its doors, and you can start sending tax returns to our central site effective now. Okay, so are there any questions out there at this point? Do you know if you can set up more than one printer? Well, let's see. Let's check it out. Oh, printer setup. Nope, you can only set up one. Only one printer. In fact, here, let me go take you over to my screen here so you can see. All right, you can see right here. Now you can have different printers going, but you can only set one up at a time. So, for instance, some people have a different, like you might have a regular printer for your returns, and then maybe you have an HP laser printer for your checks. So what you would have to do is you would have to change, if you're going to do any checks, you would have to change it over to the HP type printer, and then the rest of the time you can change it, to any kind of other printer that you might have. Okay, but no, you can only set up one printer at a time. Okay, now Tamara says, yes, you can add other printer. Where would you do that, Tamara? Let's see what Tamara has to say here. I mean, you can put several printers, but you can only set it up for one printer at a time, I believe. Oh, I see what you're saying. I see what you're saying. For the tax return, you can set up one printer, and then for the check one, you can use another printer. Is that what you're saying? Okay, all right. So there you go. So that's how you would set that up then, okay? Thank you, Tamara, for correcting me, okay? And then for reports, you can even use a third printer if you wanted to use, a third printer, okay? All right, very good, very good. Thank you. Is there a resource for additional info and training on the app for collecting remote signatures? Yeah, actually, one of the mini informational webinars, we're actually going to have two people. We're going to have one be the client, and they'll have the one app, and then the other app will show at the place of where the tax return is actually done and how it imports. So that's coming up very shortly. So you'll have that before tax season starts also. But what I would suggest is download both apps. I have both apps on my phone, and you can play with that. You can scan in forms and then put it in your trading return and see what happens. Okay, that would be another way to do it. Between now and Thursday, I'll see if I can maybe come up with something. Okay, so app, video, and see if we can do something for that on Thursday. Are there any other questions? Yeah, I don't see anything else, guys. Thank you so much for being here this evening, and I will talk to you on Thursday. Have a good evening.